Okay, guys, let's practice the capital lease for Lessee's accounting with two exercises. The first exercise is about the guaranteed residual value cases. The second one is the bargain purchase option cases. But for this video clip, we'll cover these exercises. Okay, the first step in solving a problem is recognizing it, isn't it? So there are the requirements. With first one, depreciable years of capital lease assets and capital lease obligation at inception. And third one, the capital lease obligation, non-current portion, December 31st, the year one. And then journal entry to complete the balance sheet at the end of years. So our final destination is to create this capital lease obligation, the balance sheet balance, December 31, year 1 to 3, and capital lease asset at the end of year 3. Okay, let's read the question together. 3 years non-cancelable lease initiated on January 1st, year 1 for equipment with 5-year expected life. Now, we have two periods. First, 3 years for the capital lease term, and second one is 5 years expected life. And then, keeping that in mind, the equal lease payment is $50,000 December 31st each year. So you may recognize, oh, that payment is occurring every end of year. So that is kind of the ordinary annuity. Then lease guarantees a $10,000 residual value. If the lease term contains the guaranteed residual value, then we assume that that lease asset from lessees is going to return to get the lessors with the guaranteed residual value at the end of the lease term. So we already got the answer then, because 3 years, the lease term is going to be the depreciable years of capital lease. Because during the capital lease term, the lessee will depreciate this asset. Not 5 years with the expected life of this equipment, but the 3 years lease term. So answer, we got 3 years. Okay, let's read further. The fair market value at the January 1st, year 1 is $131,856 with the residual value $10,000, which is the same amount. Then the no bargain purchase option or ownership transfer. That means, again, the lessee will return this capital lease asset to the lessor after the lease term. We have two rates. First one is lessee's incremental borrowing rate is 11%, and the lessor's annual renter to earn a rate of return on its investment 10%. So, for the perspective of a lessee's side, this investment at 10% is required rate of return from lessors. So we use 10%. Because the incremental borrowing rate 11% is also the cost of capital, but that is overall borrowing rate. So we use this 10% for the specific capital lease obligation when we recognize interest expense every year end. Then present value of a 10% ordinary with 3 years. The ordinary annuity factor is 2.4869. We will calculate present value of minimum lease payments from the future payments discounted with 10%. Then we apply this 2.869 to this $50,000 equal lease payment, and then we calculate the total, the minimum lease payment in present value. And then the present value of 10%, 0.75105. That the present value factor is not the annuity factor. That is the factor of just the present value of one-time future cash flows. What is that value? in 3 years? Right. This $10,000 lease guarantee is part of this capital lease asset in 3 years. They have to remain. So $10,000 also should be included in the present value of lease payment, minimum lease payment. Then we will compare the fair market value 131,856 with this present value of minimum lease payment, and then we will choose lower one. Right. So let's calculate capital lease obligation at inception. That is the value of capital lease the lessee should recognize, should report on the balance sheet. So how do we calculate it? Right. Here we go. $50,000 minimum lease payment every year. 2.4869 is annuity factor. Ordinary annuity factor. And then what else? Right, the $10,000 is the future cash flow, one-time future cash flow, one-time value at the year end of this lease term. So we apply 0.75105. Now we come up with the 131,856. Oh, what a coincidence. This value, fair market value, and capital lease obligation and inception are the same. So you don't have to worry about which one to choose because it's the same. But when we come up with the fair market value is lower than the capital lease obligation amount, we choose the fair market value, which is the lower one. Okay, then number 3, capital lease obligation, non-current portion. Oh, by the way, we cannot calculate right away because we need to go through the journal entry. Okay, then let's start journal entry work. January 1st, when they start this lease term, here we go. The CLA, which is capital lease asset, the lessee should recognize on the balance sheet is this amount, which is the same value as this. So we're done. Then 1 year later, now the first payment and depreciation the lessee should recognize and pay. So what is the easiest one you want to choose? Right, the cash payment is occurring every end of the year, $50,000, the equal lease payment. Then the other side, now we should recognize interest expense. Okay, why? This capital lease obligation, $131,000, is cash to pay. Actually, they borrow this money. Why? They purchase this capital lease asset. I know this is not the purchase, but we assume, or it is deemed as the capital lease asset purchased with instrument payment. So anyway, even though they recognize capital lease asset on the balance sheet, it should be cash, but they do not pay any cash on it, right? So the lessee just recognize capital lease obligation to pay. So this amount is the source of money. So the interest expense times debt balance times 10% is interest expense they should recognize. And then this cash amount of $50,000 is including the interest expense and capital lease obligation they should pay every year end. Annual equal payment of $50,000 is comprised of the interest expense and capital lease obligation. The principal amount. So the principal amount we can just plug in. Now, then, right, we can calculate the capital lease obligation in total December 31st from this balance minus this amount. So total amount on the balance of capital lease obligation December 31 year 1 is this amount. Then what else we should recognize? Right, this capital lease asset when we use, you should recognize the depreciation expense. So how long years? Along with this lease term, 3 years. But residual value is $10,000. So, okay, I'm going to put this amount with hard number because I'm going to just copy and paste later on. So $10,000 residual value divided by 3. That, I'm sorry. So that depreciation expense will apply to capital lease asset 131,000. Then we will depreciate by this amount, and then accumulated depreciation. Okay, like this. Okay, at this moment, it's hard to calculate the capital lease obligation current liability portion and non-current liability portion at this moment, because anyway, we'll calculate the capital lease obligation amount in year 2. So we will calculate this capital lease obligation will be paid from the capital lease obligation amount. So let's go one step further, which is the same journal entry work. Then, how much is the interest expense? Because we have been using one year of this obligation. So this amount is 95,000. 41 times 10% is interest expense they should recognize. So the capital lease obligation is the principal the lessees should reduce from this amount. So we should recognize the current portion of the capital lease obligation of this amount, because this amount will be paid within 1 year. So non-current liability is automatically the difference between 2. We can just plug in, and then we come up with this December 1st non-current portion, which is $54,545. Then that's it. Okay, then one step further, the same way, we pay $50,000, the third payment. Then, before jumping into this, we should calculate the total capital lease obligation is the previous balance minus the capital lease obligation, the pure obligation principal part. So $54,545. Then what is the capital lease obligation on the current liability part? Is this? I don't think so. If we put this, anyway, that amount, the non-current portion, should be 0, because the capital lease obligation from year 2, now the 1 year left, it will be terminated. So we cannot use that way, because some amount we should recognize the capital lease obligation. What is that? That's right. The capital lease obligation has been included the residual value $10,000. Because after lease term, the lessees guaranteed the residual value $10,000 that will return how much? With $10,000, and capital lease asset will return with this amount. So this capital lease obligation in the current liability portion should be this plus this. Good. So we don't have any non-current liability, because from the year 2, the end of year 2, so there's only 1 year left. So there's no portion in the non-current liability. Okay, then at the end of year, that amount is also will be reduced of the reduction of capital lease obligation. And then $10,000, the capital lease asset return. So there's no value on it. Good, understood? And then let's finish up with the capital lease asset, the financial reporting. Capital lease asset amount on the original cost was $131,856. Then we should depreciate this amount every year. Then the net capital lease asset is $10,000. Oh, by the way, here we go. We haven't considered this capital lease asset from this original cost of capital lease asset, then minus this capital lease asset, then I guess that is some problem from the calculations of depreciation expense. I used hard number. I want to be spot on, so let's use that number. So let's use this as well. Then so this one. That perfectly we made the net capital lease asset after lease term is 0 because the lessee will return this capital lease asset to lessor. So no one value of capital lease asset remained. Okay, then we will see the next exercise in the next video clip for the lessee's accounting for capital lease with bargain purchase option. It's a little bit more complicated than this. We will compare the result between this in the next video clip.